Hi guys, hope everyone's doing great. This is a technical analysis update for the S&P 500 on 23rd of April 2020. So before I continue, if you want to join the group, I'm taking entries from the 1st of May. You can join the Facebook page, so just go onto the YouTube channel, go to About, click on the Facebook page, like and follow, and you can get a sample video of sort of what we do. And there's a quick promo video here on the group where we cover more regular updates on crypto as well as the stock market. Now, obviously, sarcasm is lost on a few people. Apparently, there's a guy called Steve who's running around the British Isles telling everyone it's 1929. So I think guys like Steve, are usually on the wrong side of the trade. As I said over 3 weeks ago, the Dow Jones has bottomed here, and I do think we're going higher. Now, what we need to do is just zoom out and get the overall count. So the overall count, for those who understand sarcasm, is 1, 2, 3. This is a triangle 4, and then 5. So we thought this was the 4. We were running for the better part of a year. This is the 4. So if this is not the 4, this is definitely the 4. There's no way this is a 4 and this is a 5. That doesn't make any sense because this is 3 waves, and wave 5s are typically very Ponzi-esque, as we've already established. So this would then be this megaphone pattern which we've sort of established, as I mentioned over 3 weeks ago, sort of here. Now, I don't use the relative vigor index for those who are asking. So yeah, guys like Steve, you need to learn how to read a chart, mate. Now, the target here, let's just cover the Dow Jones here, because the Dow Jones is really not important for us. It's only important from a psychological perspective. If this is that final wave 5 of multiple wave 5s, the target I have is going to be 37,000 followed by 40,000, and 40,000 has always been the long-term call, going literally as far back as 2 years. In fact, my first ever video was down 40k, and eventually a dollar collapsed, but we're not there yet. We're nowhere near there yet. Dollar's going to go much higher first. So that would be the target on the Dow. Now the Dow is not important from an investing or trading perspective. It's only important for the psychological numbers. So if we're saying the lows are in, we are also saying that the highs are in short term anyway, and eventually we're going to move higher. Now, the reason I said 90 days is because these markets take time to move, right? The S&P, first of all, this megaphone pattern, you don't see that anywhere else. There's no way you're ever going to see this in Bitcoin. Bitcoin does not make these type of triangles. Bitcoin tends to make descending and these sort of, ascending type triangles. Even a symmetrical triangle on Bitcoin is fairly rare, to be honest, unless it's some kind of ABC truncation followed by a 1-2, which is really ABC 1-2 rather than ABCDE. But megaphones are very, very rare, but you do tend to see them on the Dow and the S&P. So everything that you need to know is in front of you. TradingView is free. It gives you the information for the last 100 years, and I'm not going to go into where this fractal has played out, but actually if you go back on the ES, we only have knowledge until 98, but if you go back on the Dow, there is a fractal of what's going on here, if you care to find it. So we're saying that the highs are in short term, the lows are definitely in, and the reason that the lows are in, because there's only so many sellers, right? We've had sellers here, we've had sellers here, and we've had sellers here. So while all of this may be a topping pattern, really, the way I'm looking at it, sarcasm aside, it's a reaccumulation pattern, and that's a lot of cause which has been built up. And given their positioning, markets have nothing to do with the economy, so you need to just forget about the news and what's really going on in the underlying market. In the underlying economy. We all know it's bad, but wave 5s tend to be disjointed heavily from what is really going on, and that then sets up this final euphoric wave 5 sort of move. So going back to what I've just been saying, rather than being a topping pattern, this is just a reaccumulation, and that's a lot of cause. That's 2 years of cause there, and the way this is shot up here, this implies a major move. We're up, I think it's near 40%. Yeah, it's a 33% move. So from this current level to say it's going to drop 20%, that's unlikely, because there's only so many sellers in the market, and we know statistically shorts never make any money. They might make money and catch a few moves here and there, but generally the market goes up 70% of the time. So you always want to be positioned long, basically. But yeah, sellers here, sellers here, sellers here, and there's only so many sellers. And once the selling is done, actually there is no more selling, and all of the liquidations are done. All the old business has been conducted, and now we have new smart money who have clearly been accumulating here the last 2 weeks. as per this video here, and we're going to go higher. And yeah, this high, as I continue to mention in the group, was formed in the overnight market. Okay, this real high, the way I'm looking at it, is going to be formed somewhere between 9:30 Eastern and 4:15 Eastern, likely early on in the morning, and it's going to be in a bit of a blow off sort of top thing, where on that day we're probably going to get a 50-100 tick range, and it's probably going to close down and form a doji. That's when you know it's the top. So I would say we're at least a year away from that. So that would be the long-term count. That, and you know, it was definitely looking pretty dicey. Okay, it was definitely looking pretty dicey. But this is not a market where you have to formulate one opinion and you can never change it. Okay, this is not 2010 where everything was going up in a straight line. Obviously, there's a lot of volatility right now, unprecedented volatility. And like I said, we thought this was the fall. So if this is not the fall, this is definitely the fall, right? You can't just continue. This megaphone cannot continue anymore. You can't get A, B, C, D, E, F, G, and then go higher. It's not going to work. And I don't feel this is some kind of 5-wave impulse. To me, that's a clear ABC. That's not 5 waves at all. It can't be an ABC, because then the wave 4 is disjointed. And frankly, on the Dow, the lowest it was going to go was 18,000. Had it dropped below these 16 lows, that would have been the big one towards 2K. So we know how it's going to end, in terms of how it's going to get there and what's going to happen after that. You know, well, let's not even go into that right now. But for right now, everything is positioned long. Now, it's not a buy any stock market. Those days are over. Those days back in 2010 and 2008 where you could just buy anything and just buy and hold, those days are over. And in the group, we sort of discuss this regularly, what stocks are actually moving. This is very much a go in, buy whatever you want, make it quick, 10, 20, 30%, and then get the hell out of there, because this is not a just buy anything market. Obviously, if you're going to buy an index tracker of the major 2 stocks, which we discuss in the group, you know, it's very clear what 2 stocks you want to be holding here. You know, leaders tend to lead in the end of a market. I don't think something like Netflix, for example, is going to be leading this market higher. There's 2 stocks in particular which are going to lead it higher. So very much a stock pickers market. But the overall opinion is that the wave 4, this wave 5 only started about 3 weeks ago, and the positioning is extremely bearish, because a lot of positioning is based on fundamentals and hype and news, whatever. And you know, that's not really how markets move. Markets discount all of that, and given how bearish it is, that eventually, sooner or later, will lead to this euphoric rise, this completely fake Ponzi rise. So no one's saying this move is not fake. Of course it's fake. It's been fake since 2008. However, fake moves, Ponzi moves, can still continue further than you know. Okay, the market can reach that sort of irrational exuberance, you know, speculative finance Minsky moment, and that's when things get, you know, a little bit dicey, when you reach these sort of, you know, 4,000 levels on the S&P. And I mean, with the Nasdaq, I've been telling the group it's going to go to 14,000. So I've got Nasdaq going all the way up to here. So that just gives you a bit of a hint as to which 2 stocks you want to be holding if you are not going to be holding an index tracker, for example. And the reason the Nasdaq's going to go higher, because the Nasdaq never made a new low here back in 2008. Whereas the S&P and the Dow did. The Nasdaq was so strong it never made a new low. So this is the 1, this is the 2, this is the 3, and this is a running flat 4. So it's not even, it's so bullish, it's not even formed a triangle. And running flats are very, very bullish, because it implies that the market was so bullish they never even allowed the C to truncate, and definitely not allowed it to form an expanded flat. So running flats in any market are very, very bullish. So that's the way I'm reading it, that the Nasdaq, this move here that's going on is going to be completely, you know, it's going to completely go off on one, on 14,000. So I would say 37 on the Dow, possibly 40,000. 14k on the Nasdaq. Very much this. Now it doesn't have to follow this, but you get the point. Post long-term capital management, when everyone thought, right, that's it, time to call it a day. Well, guess what? Stock market had other ideas. Okay, it's very common for the stock market, especially with what's going on, to completely disjoint. And with all this Fed liquidity and stimulus checks, sooner or later that money is going to make its way into the ES and the Dow and the stock market, because there's nowhere else for money to go other than the US stock market. The US stock market is literally holding up the world economy. And once this tops, then, we have to worry about what's going to happen after that. Now, short term, like I said, I think that the lows are in. There's not enough force now. There's no more sellers left now. The only people who are getting involved here are speculative shorts, and they're going to get run over. Now, short term, the only thing I would note is, number one, there's a gap here to fill. There's a gap on the ES here. So I've been telling the group sort of this is the kind of level that we have to watch, this sort of 29.15 to 29.76, or that 29.50 level, which is also the one-to-one between this and this. Now, I'm not calling it an ABC, because an ABC would possibly imply we're going to go do this, okay? I think this could just be a 1-2, 1-2, and the S&P does this. The S&P very commonly makes these V bottoms, and then it has this strange sort of corrective nature to it for its wave 2, and then it ends up doing this. Same thing sort of here, makes a V bottom, goes up in some kind of weird corrective ABC manner. You never retest the lows, and then you end up going higher. So the S&P does this. Similar sort of thing here. So here, short term, it could be an ABC. It could just be a 1-2, 1-2, or it could just be a 1, and this is all some kind of large ABC running flat. So from a long-term perspective, what this is doing makes no difference to anything. Sooner or later, before the US election, I don't want to bring politics into this. Those who have followed me for a long time know I don't take any notice of that. But the guy who's in charge right now, a big part of what he's doing, or a big part of his manifesto, has been the stock market going up. And it's not in anyone's best interest, certainly not his, for this to go down. So obviously it's not going to go down. When guys like Steve are running around telling us there's a brutal collapse going on. Steve needs to make a YouTube channel so we can all do the opposite of him. Me and Tom have been saying that for absolutely years. Find someone who doesn't know what he's talking about, doesn't know what he's doing, and just do the opposite. Everything is about doing the opposite. You don't even need to look at a chart, frankly. So that would be, but obviously you do. So yeah, that would be the first area of interest. And like I said, there is also a gap here. So if we do end up collapsing here, and I use that term very, very loosely, you could aim for this, but I'd be very, very surprised, shocked in fact, if the S&P makes it anywhere near down here. It's just impossible. And this wave here really gave us the sign that this is not 1929. The way this has moved up here, this is clearly impulsive. This is clearly impulsive, and I'm not counting this as an ABC. So like I said, short term really doesn't make any difference to what's going on for the long term. If we do go low, it might go to here, but even then, that's unlikely. But there is a gap here. And really, from a shorting perspective, the only real key area of interest is this sub 3K level. Because once it breaks 3K, everyone's going to FOMO in and get squeezed out of their shorts. Then we're likely to get a correction. And the way this is setting up, the minute the US come out of the shutdown, maybe in 2 weeks, that's obviously going to be a sell the news event. So the way I see it, this is just consolidating 1 week, 2 more weeks. Next thing you know, everyone comes out of the shutdown, figure out that they've missed the entire move. They go all in. Then we get some kind of deeper pullback, never test these lows, and then we go higher. So that whole go in May, come back St. Leger's Day, there may be some volatility, but I'm not giving short term here. You're going to have to come in the group for that, for more short term. But long term, we are just going to be going higher. And like I said, I'm very positive on a few stocks. Now, one stock, what can I mention here? Well, let's mention Netflix. Because this is interesting. Netflix has obviously had a major run-up since 2008. So you're not buying these kind of levels. So these kind of gains, this 25,000% gain, those kind of days are over. In fact, they've been over for quite a while. Now, the interesting thing with Netflix is that there is a chance this has actually topped here, because it reached 480 in the overnight market, and this is one to watch because this is doing what Disney did basically, and Disney broke out of a triangle, then it ended up going lower. So this is the thing, very much a stock picker's market. If you don't know what you're doing here, you're going to get run over. Disney broke out of here. Next thing you know, it topped and it gone lower. You're not going to see 150 on Disney again, basically. Likewise on Boeing, you're not going to see anywhere near 400 on Boeing. Now, Netflix is one to watch. This is not, I don't think it's going to take part in this rally, and I don't like what's going on here. Anything that breaks out of a balance area and comes back down below, it sets up a move to the opposite side of balance, which is here. So the chart would suggest Netflix possibly, I'm not saying it's definitely going to happen, possibly moves towards 230. So like I said, this is one to watch. This is one to watch. And obviously I mentioned Take-Two Interactive. I mentioned much higher targets, but if this is following Netflix. So this I still think breaks out in an inverted head and shoulders, but I called for sort of 300 and 316 based on the Elliot wave. But if it ends up, if there's too much bearishness and there's too much money going into two stocks in particular, we know what they are. We know what the two biggest stocks that everyone's involved in is. Very, very obvious what they are. They were big in 99 and they're going to be big again. This may just go to, let's say, 200 and then start rolling over. So it's something to watch. This is not a market where you can just jump into anything randomly and just pull a Steve. We're not here to be Steves. We're here to actually figure out what is going on a deeper level, because the old days have gone. And a lot of people have probably missed this entire rally up for whatever reason, and now we're dealing with this sort of the terminal end to a bull market. But just because it's terminal, it doesn't mean that it's ending just yet. Markets end with euphoria like we got here. In fact, it's probably best to bring it on the Dow. We've had multiple levels of euphoria here in property, here in 01, obviously 1929, and that's typically how markets end. Even in 1966, before this sideways sort of move, there was a, this sort of post-Kennedy area, whatever. We had this sort of move from 63 all the way up to 66. So, and that's typically how markets sort of evolve. Like if you go have a look and see the news headlines around 1929, 66, 01, then you get an idea. So that is the plan. That is the update. Obviously, I'll try and do regular updates when I can. I'm not too sure when I'll do them. I'll do one on Bitcoin too as well. Like I said, if you want to join the group, or you want to get an idea of what the group's about, and this is a sample video taken from the 6th of April on Bitcoin, that just gives you an idea. Then I'll take entries from the 1st of May for a few days, and then again later on in May. I don't want to add too many people. I want to keep it exclusive. The prices have come down, but it's not like most of the groups. You got to actually have a look through my old videos and figure out whether someone actually knows what he's talking about. Have a look through some of these old Bitcoin videos. They keep on taking the Bitcoin video down, so I'm not allowed to upload it, but I will upload the full non-edited commentary version without profanity of the Bitcoin 20k crash. I'm going to upload that onto the Facebook page at some point this week. Anyway, I'll catch you guys soon. That's my update. Hope you guys are safe and sound, and please do like, share and subscribe, and I'll catch you guys soon.